12 years back, 10 years back, Bajaj Finance became the first to spot a profit pool nobody else had spotted. It was doctors and dentists. The conventional view of doctors and dentists in India was by, say, high street banks like HDFC Bank, that these are self-employed people and they have to be lent money with interest rates that are higher than what salaried professionals pay. Bajaj Finance's work suggested that doctors and dentists' cash flows were just as stable as, say, Mr. Vinay Khattar's at Edelweiss. He's a salaried employee for a prestigious firm. But a doctor and dentist has cash flows which are just as stable as Khattar's house. So they started a lending program which targeted this profession, doctors and dentists, and they went on to build the largest book of doctors and dentists in the country. I think there are around 10 lakh people in this doctor dentist profession in our country. Bajaj Finance has the largest book. Once they built that book up to a large scale, they did big data on that book itself. Right? And they were able to stratify their medical book. They were able to stratify that into 600 categories, depending on is the doctor from a top 20 medical college or is he from a bottom 50 medical college? Is the doctor a cosmetic surgeon or is he an oncologist? Is his clinic in Bandra or is his clinic in Sholapur? Right? Depending on metrics of that, they were able to grade on risk the doctor profession into 600 different gradations, and they priced these customers accordingly. As soon as they did that, the barrier to entry was built. Because if tomorrow some other NBFC, some other smart NBFC, say a Cholamandalam says, I also want to build a doctor and dentist book, they will target the profession, but they won't be able to do the gradations of risk. So therefore, when they approach an oncologist who's got a 20-year practice in Bandra with a All India Institute of Medical Sciences degree, they won't realize with that sort of doctor, you offer them the lowest rate possible, whereas with a cosmetic surgeon in Ludhiana, you might be charging them a higher rate, right? So because the new entrant into the medical lending profession won't have Bajaj Finance's big data, they won't be able to price discriminate as efficiently. That becomes the barrier to entry. Not only does it stop the competition from entering, you can also see how damaging it is. The new entrant will pick away the worst risks. The doctors that Bajaj Finance has charging high rates to, those are the guys that will get pulled away by the new entrant into the medical lending area. Once they did doctors, then I think after that they targeted chartered accountants, then they went after architects and so on and so forth. This has reached a stage where today 75% of India's consumer durables are financed by Bajaj Finance. Right? And it's become almost impossible to compete with them in consumer durable financing. So and if you want to validate this, go to a Vijay Sales if you're in Bombay, or go to a Chroma if you're in some other city, and watch how the store operates. There'll be a Tata Capital desk there, there'll be some other lender, there'll be a Bajaj Finance desk. And you'll see that 90% of the lending is done by Bajaj Finance. Why? Because their big data allows them to give the customer a decision in 2 minutes flat. The customers come to the Chroma, he wants to go home with the washing machine or the fridge or whatever it is, he needs an instant decision. Bajaj Finance big data algos are so finely developed, they can whack out a decision even without the CIBIL score on a self-employed borrower. Right? This is giving the companies basically tactic to get customers as consumer durables. Once you take a consumer durable loan from Bajaj Finance, they then score you further and then bombard you with cross-selling, and after that you become a money machine for them. Now, this tactic has given this firm an almost invincible barrier to entry. Nobody else can earn their ROEs with their compressed levels of risk. So if you see the translation of this on the liability side of the franchise, in the commercial paper market today, Bajaj Finance is borrowing not just at lower rates than say a Piramal Enterprises or say the housing finance companies. Bajaj Finance is borrowing 1.5 to 2 percentage points cheaper than even prestigious NBFCs like Cholamandalam. Right? So Bajaj and HDFC, BAF and HDFC have gone to a level where they're getting money at 4.5%, where the rival is getting money at 6.5%. Bajaj Finance is geared 5:1. If you're getting funding 2% cheaper, you multiply that by the gearing. Bajaj Finance's steady state ROEs end up being 25%. The industry steady state ROEs at best are 15%. Right? And this moat will keep getting richer as the company gets bigger, as other NBFCs die due to liability challenges. Bajaj Finance's market share rises, their data increases, the big data analytics become more minor, and you've built a virtuous cycle of more data. Right? So this is one example of a modern data science specialist. I think they're Salesforce's largest client in India. I won't be surprised if they're also amongst Microsoft's largest client.
We at the Profit Curve acknowledge that the source of this video is Edelweiss Financial Services and the event which Edelweiss conducted, Emerging Ideas, brilliant event. We also recommend you to subscribe to the Edelweiss YouTube channel. I think they have some fabulous videos, very knowledgeable. Also, we acknowledge and give credit to Edelweiss and the gentleman on your screen, Mr. Saurabh Mukherjee. He is from Marcellus Investment Managers. The case study that he just spoke of, we are sharing on our channel with full credit to these guys as a knowledge base. We are just doing it to spread this knowledge which this gentleman has just shared. Keep profiting and have a nice day.